Association of British Insurers is a body that looks out for the collective interest of the UK's insurance industry. On a regular basis, they keep track of the actual premium paid by insurance policy holders, private motor insurance policy holders. A recent report that they have published shows that the average premium paid by private motor insurance policy holders in the last quarter has gone up by 8% compared to previous quarter. The goal of most private motor insurance providers in the UK is basically to ensure that they provide the top products at affordable premium. Most of the companies give that their very best shot, trying to ensure that they provide affordable deals at affordable premium rates for their intending and existing policy holders. There are other fees that you can learn about, and if you really apply your knowledge of how they work, you may be able to cut down on your insurance costs. What are these fees? Hey, it's CJ. Let's talk. In this video, we will discuss about 10 fees you need to learn about. Most of them are already part and parcel of your insurance premium. Some of them are very chargeable, so kind of unavoidable, but then some of the others you can better manage them by making a couple of very good decisions as the need arises. Let's get right into it. The first of the fees we'll be considering today is the policy arrangement fees. As a new customer, if you want to take out a brand new insurance policy, some of the insurance companies, they do charge an arrangement fee. It's usually within the range of 10, 15, 20, 25, or in some cases 30 or 40 pounds. For some of the companies, even if you run the quote online all by yourself, you still get charged an arrangement fee when you take out the policy, and that's simply because they'll have to do a couple of checks. They'll have to check the motor insurance database to update your vehicle registration number and other details. They'll check the claims and underwriting exchange database just to find out the previous claim records you've had in the UK. They'll check the licensing database to confirm your driving license number, find out all the points that are applicable or have been accrued by you over years, and a few other checks. And it is basically the cost of them doing the background checks for you and providing you a cover. So it's the arrangement fee. It gets usually added to your premium. The second one is the renewal fee. It's similar to the arrangement fee. It's just the cost of starting a new policy for you as an existing customer. Intending customers that just take up a new policy for the very first time as policy holders gets charged arrangement fee. Whereas when you've had your policy for a full term, let's say for a 12-month period, and then it renews, if it either auto renews or you manually request for a renewal, some of the insurance companies would charge you a renewal fee. A lot of other companies can also waive this fee for you. You need to find out how much the renewal fee is, and you also need to find out if it can be waived in your case, especially if you've been an existing customer and you've been with the company over time. So the third one we will consider is the contact support fee. Some of them call it the call center fee. It's usually within the range of 5, 10, 12 pounds, 12 pounds, 50 pence, 10 pounds. Most insurers expect that you just to go online, read through their products, go through the terms and conditions, take out a policy without interacting with any human. However, if you are in the category that even after reading the terms and conditions of insurance policies, you're still not quite clear on a few terminologies or the full meaning of certain phrases, you may need to get in touch with someone to discuss the product if you're in this category, it's absolutely fine to get in touch with the insurer. So when you ring the call center or when you try to engage them in an email or a chat online, they would charge you the contact support fee. If you call the call center, they are going to charge you the call center fee. But remember, this is just applicable to people taking out brand new policies. They walk you through the details, help set up the policy for you, and you'll be sure that you have a good understanding of the product you're buying, and you also understand the terms, they may not discuss everything with you on the phone, but they'll discuss the major terms and conditions, and you will also be able to ask questions to find out what is obtainable and what isn't obtainable on your policy. I see it as a very valid fee that I would want to pay, because if you take out a policy on your own online and make mistakes, then you'd probably have to ring the insurer and expect them to help rectify the error. That may lead to change in premium. If the policy was set up by the insurer themselves and you kind of discover that there's an error, it will be on them to make any corrections, to put the policy in order and all that. I consider it a safe fee to go for. But if you're absolutely fine, if you have an understanding of the features of your policy, if you know what you want and you're able to take it out online, then the call center fee is a good fee to avoid. Next one is the payment default fee. When you take out your insurance policy, there are a couple of payment options available. Some insurers will allow you to pay on monthly basis. The payment will be processed through EFT. EFT is a technology that means electronic funds transfer. A couple of days before the due date, the insurer would request for payment from the bank. Then the bank would ensure that the payment is processed back to the insurer on your payment due date. So the payment due date is the day in the month that you have selected for payment to go through, right? So the direct debit option of payment will allow you to make equal installment payments over defined policy time frame, usually 12 months. Payment by installment basis is not available to every customer. Usually insurers carry out a mini background credit check to find out if you're credit worthy. A combination of the amount you're paying and your credit check would make you eligible for the direct debit installment option. If you've paid your bills upfront, then you would have avoided the payment default fee. But if you pay your bills on a monthly basis, first of all, your premium is slightly higher because of the interests that accrues from the direct debit arrangement. The APR is usually up to 30% in some instances and even more in some cases. Then in addition to that, if you default in payment, if you miss any payment, the insurer may charge you the payment default fee. Some call it the direct debit payment failure fee. So if you miss a payment, they may charge you like £12 or £10 or £15, depending on the insurer that you've taken out your policy from. And that's one fee that is totally within your control to avoid, because you decide on when the payment will go off your bank account. All you need to do is to ensure that month on month you always have your installment amount available at the right time, so that the company will be able to get their funds processed by your bank. If for any reason you will be unable to meet up with payment, you can actually ring your insurer and discuss with them ahead of time. That will save you so much headache of having your policy increased by the payment default fee. For some insurers, when you miss the payment, they give you a timeline. Oh, we tried to take the money, but your bank advised that the payment failed. So we will try again in 7 days. Some will try again in 3 days, depending on the arrangement that they have in their business rules. If they try again, probably the second or the third time, and you're still unable to make payment, then at that point they would slam you with the payment default fee. If you're unable to make payment after a defined period of time and they've made several attempts to recover the funds from you, then they would alert you that this may affect your credit rating, because they may have to report that accordingly by handing over the debt to an external debt collection agency. The default payment fee is entirely within your control. So if you pay your insurance premium on a monthly basis, ensure you have the right amount of funds in your account on the right dates, so that there wouldn't be any direct debit payment failures at your end. And if for any reason you're unable to meet up, do well to reach out to your insurer and renegotiate another payment date. It may not be necessarily changing the entire payment schedule that you've got. It may just be delaying your payment for the particular month by a couple of days. A number of insurers are quite lenient when it comes to payment in the UK. They have a whole lot of offers that can help you bounce back to your feet in terms of keeping your payment up to date. One of the options could be that you make a part payment. Some of them could take maybe 50% of the money, and then the remaining balance will be spread across your other installments, your future installments. Or some others may ask for 40% and then spread the remaining across your installment. If you're running late on payment, don't just sit and worry all through. Make a call, ask for options, request for extension. If it's possible, they will give you extension. If it's already too late, they'll give you other options that you can deploy to ensure that you avoid the late payment fee. And please do mention when you're interacting with them that you need options that would help you avoid the late payment fee. The next fee we will consider is also another fee that I feel that is totally within your control and it's completely avoidable. It is the validation adjustment fee. Now, when you take out an insurance policy, what some insurance companies do is that they subject your details to a kind of validation. Basically, what they do is to look through the details you've provided and ensure they are all accurate and up to date. Let's say you've specified you'll keep your vehicle overnight at your home, and then you eventually move. Probably you were staying with your friends or parents, and then you move to another place and you forget to update your address with your insurer. By the time they run a validation check, they are going to see that your address isn't up to date. Your policy could get cancelled. In cases where it doesn't get cancelled, they will have to adjust the policy, and that could lead to a change in premium. In addition to that change, you would be subjected to the validation penalty. So you'd pay the validation fee. The validation fee for some insurers is up to £30. In some other cases, it's £20, and it could get to £60. One major record that a lot of people fail to provide is a record about their driving history. So if you've got any claims or any points added to your insurance, maybe due to driving convictions, you may need to state everything that has happened joining them, so that they'll at least update the records and make sure it's accurate. Another thing that people miss out on is the number of years of no claims discount. Let's say you have 6 years and you set it as 9 or more years. You're going to take out the policy at a very cheap rate, right? During validation, they are going to request for the proof of your no claims discount, and that's because your records would show that what you have provided is not consistent with what they can find at the background. While most insurers do 100% validation, some others just make a random sampling of the new customers that they have acquired over a period of time. So if you happen to fall within the number that they're going to sample with, it means that every single information you have provided on your policy will be subjected to checks. If anything is incorrect or not rightly presented, they would have to make an adjustment to correct it. And while doing that, they may charge you a validation fee, which is like a penalty for providing wrong information. Ensure you provide accurate details. If you're taking out the policy online, ensure that the information that you have put in, they are all up to date and accurate. And if you're doing the policy with them on the call over the phone, also ensure that the feedback, the answer you give to every question is correct. If there's a question you're not sure about, let's say if they ask you the kind of security feature that you've got in your car, probably you have the factory fitted alarm and immobilizer. If you're not very sure about that, you can ask for options that could guide you towards selecting the right one, or you can just request for them to give you some time to check and get the right details, call back and complete the transaction. They will store your code. Most companies would store a code for you for up till the end of the day, depending on, some store up to 7 days, depending on the insurer. The next one is a very big one. It's the midterm adjustment fee. If for any reason you have to make an adjustment before the expiry of the policy period, your insurer may charge you the midterm adjustment fee. Adjustments could vary. Probably you just got married and you've changed your name, or you've changed your occupation, or you've changed your address, you've bought a new car, so you've sold the old one. All those fall within the midterm adjustments. And for most insurers, they will charge you a fee to complete the midterm adjustment, and it's called a midterm adjustment fee. The fee ranges from £15 to £30 or £35, depending on the company. If you process your thoughts properly and align your decisions accordingly, you may be able to save yourself unnecessary fees while completing several midterm adjustments. And here's what I mean. You want to retain the same policy, but you just want to change the car. So you call your insurer, you tell them you're going to pick up a new car in 7 days, and then they do a change for you and set it to go live in 7 days. At that point, you will be charged a midterm adjustment fee in addition to the change in premium. Now, the change in premium could be an increase or a reduction depending on a lot of factors. But remember, we're focusing on fees. So you've paid the midterm adjustment fee in addition to the change in premium, and let's say it's an increase. Then you're just waiting to pick up your new car from the dealer and drive home in 7 days. And then along the line, on the 7th day, you get there and discover that you would need to still keep the old car for a couple of days before you sell it. So you'll probably ring the insurer again and renegotiate another adjustment to add your old car back to your policy, maybe temporarily for a short term. At that point, you would also pay another midterm adjustment fee to add the car temporarily, in addition to the change in premium. But let's focus on the fees for the sake of our video today. Then you get home and discover that you'd fancy a private reg. Complete the process with DVLA and they get it delivered to you. But for some reason you were busy, and then 2-3 months later you ring your insurer to say, well, I've got new reg from DVLA, I'd like to set it up on my policy, and they charge you another midterm adjustment. Now, these 3 changes, you could have just paid one adjustment fee for 3 of them if you had processed your thoughts better. And here's how. At the point of making a decision to get a new car, you should decide on what to do to the old one. If you're selling it off, it's absolutely fine to decide on when and where, who's gonna buy it. Make that decision quick and tidy. Then, if you're keeping it for a couple of days, you also need to make that decision so that at the point of speaking to the insurer, you've already decided on what's going to happen to the old car. So if you're selling it off, there's no need to add it anywhere else. If you want to keep it for a couple of days, they may offer you a temporary cover. And for most insurers, when you make multiple changes at the same time, they charge only one fee. And some of them also give you a window after which you can make another change without being charged a fee. For instance, in the scenario we looked at, the policy holder could have just done a change of vehicle from the old to the new one, and then add the old vehicle again temporarily until he or she makes up his or her mind to sell it off. And those two transactions would just cost one midterm adjustment fee. That's just maybe £20, for instance, as against paying 60. The policyholder should have also made a very fast decision concerning the private reg. Find out from the insurer how long they have to make further changes at no cost. It could have been maybe 4 weeks, 6 weeks. In some instances, some insurers would allow you to update your registration number within 6 weeks without charging an extra cost. So if they hadn't waited for over 2 months, if they had just made that decision within the right time frame, that would have been making 3 adjustments and paying 1 fee for the 3 of them. It looks a bit affordable, it's just 20 quid, but then by the time you calculate the number of changes you've done in a policy year, let's say you've made like 10 changes and you've paid £25 for each change, that would mean additional £250 at the end of the policy year. That's a fee that you could have properly planned for. The changes that are chargeable, you definitely pay for them. Then the changes that you could have merged, you would have just done the same. The next one is the credit card fee. Most insurers would allow you to make payment with either a debit or credit card when you take out the policy or when you make an adjustment to your policy. Most of them do not charge the credit card fee, but some others may do. You may consider that while making payments. So the next one is the multi-product policy fee. Some companies may allow you to set up multi-car policy where you will be able to have multiple cars on your policy. You may need to find out if there is a fee attached to that, a fee that would be charged for you adding another vehicle to your policy or not. Some insurers wouldn't charge, while for some it's worth finding out if they would charge you. Next one is the postal document fee. Well, most insurance companies in the UK wouldn't charge for this, but it's also worth finding out if some others will fancy you paying a couple of quid to have the policy booklet sent to you by post. Most of the insurers already have very effective and user-friendly online platforms that would enable you to log in and download your policy documents. If the information isn't available, you can ring them and they'll make a soft copy available at no cost. However, some people still like the black and white, which is absolutely fine, especially if you're a policyholder that travels a lot within Europe and you drive yourself across several countries in Europe. You may need a booklet because you may never know, your internet connection may cut off when you get to a particular border and you wouldn't be able to display your policy online. So you would need a paper document. It's absolutely fine to call your insurance company and request for a copy of your policy document, the most recent policy document, to be sent over to you. And most of them would request for your postcode or just validate that the one they have on the system is still accurate. And with a couple of clicks, they'll generate the report and have it sent over to you over a defined timeline. In the UK, mostly it takes 7 to 10 working days, well, between 5 and 10 working days to get physical paper documents delivered to addresses. So it's worth finding out if they're going to charge you an extra for that. If they will charge you extra, you can just consider downloading a soft copy and saving it on your phone, and that's still a valid way of having yourself covered. So if you drive a lot through Europe, you can request for your policy documents to be generated and sent over to you by post if it's free. But if it's not free, you may just think about downloading it and saving it on your phone. That'll save you a couple of, phones. I'm so glad you followed through up until this point. If you're yet to subscribe, remember to hit the like button, subscribe, so that anytime we post quality content, you'll be among the first to see it, to know about it, and to watch it. and thank you for staying through till now. Here's the last one. One of the most important fees you need to consider while taking out an insurance policy is the cancellation fee. Most insurers would allow you to set up your policy and then they'll give you a cooling off period. The cooling off period is just a timeline that has been allotted to you to look through the features of the cover, go through the policy documents, find out if you like the product. If you do not like the product, you have every right to decide to cancel your policy. If you cancel your policy while you're within the cooling off period, most of the insurers will not charge you at all. Some of them will charge you just the arrangement fee that had been charged earlier when you took out the policy, and some others wouldn't do that. But then there is the cancellation fee. The cancellation fee is not charged while you're in the cooling off period. However, if you cancel your policy while you're outside of the cooling off period, most insurers will charge you a cancellation fee. For most of the insurers, the cancellation fee is also non-chargeable depending on certain circumstances that have led to your policy cancellation. For instance, if you've got a new car or a different vehicle that they are unable to provide a cover for, then they wouldn't charge a cancellation fee. If you've had a claim, some companies wouldn't charge you. If it's a total loss claim, some insurers wouldn't charge you a cancellation fee. If you have been advised to stop driving by your doctor on health grounds or probably due to your age, some companies wouldn't charge a cancellation fee. Most insurers have the bereavement unit that will process cancellation in the event of the death of a policyholder, and they will most likely not charge a cancellation fee at all. There are other instances where the cancellation fee is absolutely chargeable. For instance, you're cancelling because you've seen another policy elsewhere, or you're cancelling because you're traveling out, you're cancelling because you just want to stop driving, you're cancelling because you can't afford the policy, you're cancelling for any reason at all. If you decide to cancel the policy, then you will be charged a cancellation fee if you cancel outside of the cooling off period. Insurance companies may decide on their own to cancel your policy due to a breach. For instance, if you default in payment and they give you several timelines to pay up, if you miss all the timelines, at some point they may have to cancel your policy and transfer the outstanding to a debt recovery agency, which will impact your credit rating, and they will also slam you with a cancellation fee. Or if you breach any other aspect of the policy, let's say you had a provisional license and then you passed your test and you failed to update your license from provisional to the full UK, maybe full UK manual or the full UK auto. If they alert you and give you a couple of reminders, eventually they'll have to cancel your policy. They may request that you pay the cancellation fee as well. It is important that you understand the terms and conditions of your policy so that you will avoid the cancellation reasons that are clearly avoidable. And the cancellation fee is usually the heaviest fee charged by insurers, and that's because it's a breach of contract. You had a 12-month contract with them, for instance, and then few months or before the 12th month you decided to opt out, so they will slam you with a cancellation fee. It's usually between £25 and it gets as high as £60 in some instances. For most insurers it's usually 45, for some others it's 55, but a couple of people would charge you £60 for just cancelling the policy on your own. If you're considering taking out a cheaper policy that you've seen elsewhere, you have to factor in the cost of cancelling the current one. And most times the cancellation fee is not the total outstanding. If your total outstanding at the time of cancellation is a clear combination of any outstanding for the days on cover plus the cancellation fee. Finally, we've come to the end of this one. We've been able to look at 10 important fees that you need to know about. Most of them are chargeable. Some of them are clearly avoidable. Make use of the information, manage your policy better, make the right decisions, notify your insurer when you need to. If you have any updates, do not hesitate to bring it to the knowledge of your insurers. Keep your payment up to date. If for any reason you discover that you're going to run late on any payment, do engage your insurer, discuss and renegotiate a new schedule if possible, or a new payment date. Avoid the ones you can avoid, manage the ones you can manage. Consider making multiple changes at the same time on the same call so that you probably pay one fee. That's it from me. See you on the next video. It's CJ. Thanks for watching.